Hey guys, it's Daniel Gomery, your local realtor. Coming at you with another video today, and this one's extra special. I have one of my friends, trusted mortgage lender here, Clark Sexton from Real Mortgage. Clark, you want to say hi real quick?
Hey guys, how you doing?
And guys, I want to bring this to you. There's a lot going on right now, we know, with the coronavirus, with COVID-19, how it's affecting the market, buying and selling. But there's a lot of myths going around, I guess I would call them, with some things in the mortgage industry, especially if you have a mortgage. So I want to bring Clark in, kind of do a quick interview. This won't be long, 5-10 minutes, just to go through some highlights of what's happening out there. You guys can use that personally to make your decisions here. So Clark, I guess I'm going to start with this, with the myths that are going around, everyone's seeing on the TV or the radio or Facebook about forbearance, forgiveness, deferment of your mortgage payment. A lot of people are thinking that they're just going to get 3 months free. They don't have to pay their mortgage. Can you kind of just elaborate on that, of what's real versus what's a myth, and what you would recommend to people in that situation?
For sure, and I want to say thank you for allowing me to come on here with you, Danielle. And most importantly, more than anything, guys, we want to make sure that everybody and their family stay safe, stay healthy, stay home. So let's keep that, our priorities straight there. But let's talk a little bit about this whole process. And there's 3 terms that we need to make very clear distinction of what they are, so that you understand, because there is a lot of misinformation floating around out there. The first one is forgiveness. Forgiveness just means it's gone. You don't have to pay it anymore. That is not what's happening. Okay? This is not a loan forgiveness. The second one is deferment. Deferment may be a common term that you're used to because of student loans. A lot of people have student loans deferred. What that means is that the amount that you don't pay is added onto the back end. So let's give an example. Say you owe 320 months on your 30-year loan still, okay? What they would do is, and say you defer it for 6 months. So you don't have to make a payment for 6 months, but then at the end, now you owe 326 payments. Make sense? Yep. So the 320 that you're already owed, plus the 6 that you're not making, it's added onto the back end. All right, that's what deferment is. But that's not what's being offered right now. What's being offered and currently being talked about through servicers is what's called forbearance, which is way, way different.
No, so, that's important. So elaborate on that, Clark. Like, what is the difference, and what they're offering now, forbearance? I mean, are there pros versus cons? What would you?
Yeah, so I mean, there really isn't any pros with it. So first of all, we want to recognize that many people have experienced a reduction in income or a total loss of income. We're not making light of that, okay? So we recognize that that is definitely a challenge, but I encourage you, if you have a mortgage, to do everything you can to make your payments, because here's what forbearance looks like. I have some examples for you. So let's say that you call up your servicing company and you say, I want to be in forbearance for the next 6 months. And they say, okay, you can do that. So what happens is this. Let's say, for example, your payment is $1,500 a month.
Okay.
You don't make your payment for 6 months. You would, at the end of that time frame, okay, the mortgage company is going to call you back up and they're going to say, okay, you've had your loan in forbearance for 6 months. Now this is month 7. You owe us for the last 6 months, plus you owe us for this month. So if you do that math, that is $9,000 for the 6 months, plus another $1,500, $10,500 that you owe them for 7 mortgage payments.
All at once in 6 months, right?
All at one time, due right then. So if you've had a reduction in income or a job loss, even if you're back to work, Daniel, who can possibly pay $10,000 7 months from now?
Yeah, right. Well, that's why I think it's important to bring light to this, because, like I said, people are seeing maybe a shiny coin, or I don't know if I want to term it that way, but they need help right now. And so they're thinking, if I can get 6 months free or forbearance, it sounds good, but that's why I want to make sure that we all understand that it's not free. And like you said, you are going to they're going to collect that each month plus the remaining month 6 or month 7. So it's really tough. And like you said, if by any way you can make your mortgage payments, that is number one, the best thing to do. Now that kind of transitions me, Clark. Let's say I'm comfortable. I have my payment. Maybe I'm still working. Maybe I'm not, but it's just unprecedented times right now. What is another option if I want to keep paying the payment, but maybe it's a little high, or maybe I'm a little uncomfortable? I mean, what else could we do?
Sure. And then one thing I do want to close the loop on the forbearance too, before we get to the refinance, if we can, is if you say, well, I can't pay $10,500 and on month 7. So you say, well, what can we do then? They'll say, well, okay, what you can do is we'll take and we'll spread that over for the next year. Well, that sounds a little bit better at least.
Sure.
But the problem is if you do that math, your payment goes from $1,500 to $2,250 for the next 12 months. Well, once my payment in a normal situation, you're not okay with your payment going from $1,500 to $2,250. So why would you be okay with it in that situation? So then you call up and say, well, I heard rates are low, right? Which kind of leads to your question. Rates are low, refinance. The problem is if you've participated in the forbearance, you're not eligible because your loan is in forbearance. And the issue is this: we're not being told the full story on social media certainly, and even in the media. They're not giving us the full scoop as to what's going on. And there are people that have called me that are working currently that thought, well, maybe it's a good idea if I just have a couple of months off on my mortgage.
Right.
And not realizing, because they're not being explained fully. So that's why the importance of these type of conversations. Now, get into a refinance. If you're currently employed and maybe you have an interest rate that is, wherever it is, doesn't really matter where it is. Maybe you have some equity in your home, you've accrued some debt during this time or whatever. A way to help alleviate some financial monthly payments is to be able to look at a refinance. And we can offer you a complimentary review of your mortgage. And if you're in a good spot, we'll let you know that. But if there's opportunity for you to be able to save some money right now, and here's the great thing about it, Daniel, after your refinance, you get to skip a mortgage payment afterwards. So that is a little bit of payment relief without any issues there, right? There's no penalty for doing that. So there is a way that we can approach this, but we need to have a conversation. I cannot stress enough, if you can make your mortgage payment, please do so at all costs.
Yeah, no, I totally agree. And we had, with the refinance industry has been booming the last couple of months before COVID-19 because the rates are low and we were already reducing payments, for the average person to begin with. So like you said, in this circumstance, we've already been doing it for a number of months. This is really ideal for a lot of people out there to get into a little more comfortable position. And you mentioned it, but I want to repeat it to make sure everybody caught this. If you're thinking, I'm going to do forbearance, let's try to do some forbearance for 3 months, 6 months. And then if times get tough, just hypothetically, now I'm going to refi. I want to make sure that's clear. You're not able to do a refinance, correct? If you've already done a forbearance, they're not going to approve you to do a refinance at that point.
That is absolutely correct. We cannot refinance a loan as in forbearance. It is very reminiscent of back in 2008 and 2009 when people were doing loan modifications. And they would call up their current mortgage company and say, hey, I want to modify my loan. And they'll say, well, your payments are on time. You're not demonstrating hardship. Don't make your payments for 90 days.
Right.
So then they would do that per the advice of the mortgage company, right? Then they would call back after 90 days and they would be in this process, sometimes 6 months application of trying to demonstrate their hardship. And at the end, they'd be like, you don't qualify. So now at this point, some people would go on 9 months of not making a mortgage payment. And now guess what starts after that? Foreclosure.
Right.
So here, per the advice of the mortgage company even, they stopped making their payments and many people lost their homes in those situations because they followed after the advice. So that's why I say this time right now reminds me a lot of that. So make sure you're very careful and speak to your servicer, whoever that is, and speak to a mortgage expert because you don't want to get bad advice and end up losing your home when you could have prevented that.
Right. Okay. So we've kind of covered that, the forbearance, deferment, refinance. I think we've pretty well explained that. If anyone does have any questions, please reach out to me. We can get you in touch with Clark. I think bottom line is try to make your payment if by any means possible. And if you need to make some adjustments on that, make sure you get approval and some advice from your servicer or a trusted professional like Clark, like yourself. Now, Clark, the real estate industry is definitely slowing down. We're seeing a lot less activity, a lot less homes on the market. But ultimately, there still are people moving. There are still people who are essential workers. They might be getting job transfers, et cetera. And there's people who do have to move. It's not a matter of I'm thinking about it. Like their life changes are happening and they must move. So what's your recommendation? What's your advice to someone out there in the current market who must buy or must sell?
That's a great question. So first thing is this: if you are pre-approved right now and you did not buy a home for whatever reason, doesn't matter why, but you have not purchased a home yet, and you have an FHA or a VA loan, you need to speak to your lender again. And if you want us to give a consultation, we can do that. But because the guidelines have changed on those government loans,
Gotcha.
you don't qualify anymore because they've really gotten tighter during this time. Conventional loans have pretty much stayed status quo, so no issues there, pretty much. Likewise, if you are listing your home right now and you have a large pool, or most of the buyers are coming in, your offers or people looking have come in with government, FHA, VA, stuff like that, those type of offers, you need to, before you accept an offer, you need to make sure that their pre-approval is reevaluated, because that buyer, if they qualified back in February, they may not qualify today.
Right.
So you have to be very leery and very careful in that.
Right. And we do that as listing agents, and we go through that, or the best agents out here, we go through and vet them and make sure if we have multiple offers or even one offer, we make sure it's not just a piece of paper. We make sure it's a real pre-approval. But like you said, in these times, A, somebody might have lost their job, or B, with these FHA requirements, criteria, which is a good thing, by the way, to make sure everybody is qualified for buying a home. We just have to double down and actually make sure these buyers are qualified before we accept an offer and take it off the market. Now, if you're buying, though, like you said, rates are still low. I mean, you're still able to get good low payments and get into a good quality house, right?
Absolutely. Rates are still historically low, and we are committed to helping our clients purchase their homes. We're not missing target closing dates. The biggest challenge that we have right now, just by sheer capacity, is with appraisers, really. That's the biggest thing that we're running into issues, just because there's only a certain number of appraisers. And as you mentioned earlier, so many people are refinancing. That's where they're coming to in terms of capacity. But we, as a company, we are committed to be able to hit those target dates, and rates, yes, are still historically low. Typically, rates are actually better on a purchase than they are on a refinance anyway. But I would encourage people that are considering to buy to get your information in line now. Because here's what's going to happen, Daniel. This too shall pass, right? Eventually, the stay-at-home order is going to be lifted, and things are going to go back to normal. And there is going to be a flood of people that are going to be wanting to buy a home because they want to do it right now. They've been at home, they're ready to move, they've had life changes. You have people that are graduating from college, whatever it is, people's life changes, having children, people are going to be wanting to move as soon as everything is lifted. So I would suggest to you that to get yourself, position yourself, get everything in line right now, get your pre-approval going. And that way, when things open up, you can jump on the homes that are going to come into the market. Because what you don't want to do is get into a situation where you wait, find a home you love, go then try to get pre-approved, and the person who's already pre-approved puts in that offer and you lose that house.
Right.
Got to be very careful there.
Yeah, definitely don't want to miss out. And like you said, there's going to be a surge. I talked about this. Many of you, we've talked personally about it, and we see that coming. It's just when, not if. When's that surge coming? So like you said, basically get your ducks in a row, get your pre-approval updated if needed, if you haven't found a house yet, and really come up with a game plan. And that's when you have good partnerships with you, yourself, Clark, or me. We make a good team, and it doesn't necessarily have to be us, whoever you're working with. Just make sure you have good people in your corner who are advising you of what to do and get yourself
Sure.
there. Yeah.
Absolutely.
Well, Clark, I appreciate it. Like you said, number one priority, I hope everyone out there is staying safe and healthy. And if either of us, I know we're both, I don't want to put words in your mouth, Clark, but I know you're a good guy. And if we can do anything to help anyone out there watching this, please reach out to us, let us know. And of course, real estate, mortgage related, any questions or advice, we'd be happy to offer that as well. Any final thoughts, anything from you, Clark, at all?
No, just really, guys, once again, in terms of the forbearance piece, that was a major crux of what our focus today. If at all costs, try to figure out a way to make your payments, because we don't want you to lose your homes, and really read through paperwork if you do consider a forbearance so that you know exactly what you're getting yourself into.
Yeah, definitely, for sure. Good advice. So, well, thank you guys all for tuning in. Again, thank you, Clark. I appreciate offering your advice and support here. So again, thank you, everyone. If we can do anything for you, please let us know.